Okay, folks, welcome to Best Stock Picks over at the Contrarian Trader. This is Bob Desmond. Let's kick it off with the events that are unfolding over in Europe. We have some real serious fighting in the Ukraine, supposedly Russian troops over the border. Of course, they're going to deny it, and a big port city, Metropole, I believe it's called, is under siege. Also, you have the Greek elections coming up this week, and you have the European Union under Mario Draghi, the ECB, which announced their own QE program last week, $1 trillion worth of new debt or monetization of their debt. Similar to what we saw back here in the States, what happened, we saw European stocks rally. Now, you had all the billionaires and the central bankers of the world, the leaders of the so-called free world over in Davos, celebrating the fact that there was another round of quantitative easing going on. They'll get richer, the middle class will get poorer, and basically that summarizes what their message was out of the meeting, out of Davos. It was that people in the middle class, or even in the upper class, supposedly upper class in earnings anyway, they need to get ready for a lower standard of living. That's what they said, not my words, theirs. I prefer to reject that notion because we don't need to. We use the charts. We'll trade the stock market. We had a great week last week. FXCM, a great trade. Now we will be looking to trade the markets aggressively in the coming week. Let's kick the charts off with the NYSC. And I go into these charts in greater detail on the Focus Stock Analysis video that was sent out this morning to members. And that's where we review the stocks on a watch list as well as trades that we're currently holding. Yesterday, I sent out the market pulse check, and that's where we review the health of the overall markets, currencies, and the bond market. And those have each been sent out to members and are posted on the website. You can always sign up, view those, easy to do, 14-day free trial offer. Let's kick it off with the NYSE composite. We remain in a consolidation. What concerns me most about this chart is that we pulled back, retested the lower band of this triangle formation. We have rallied back up and into a resistance level, which was very strong support on several occasions, now acting as resistance. If this rally off the lower band here fails and we roll back over, that's going to be the third consecutive lower high since we've entered this formation. That is not a bullish event. Volume on Friday was about average. In the bullish camp, we have a double bottom setup on the slow stochastics. Each line, the red and the black line, is trading above 50, which is bullish. Also bullish is that you have RSI. We're making higher lows. We have broken out above resistance and close there. Very important. We did that on Thursday. On Friday, we pulled back. We haven't retested this level yet. We may get that retest on Monday. We'll see whether or not it holds, but we may have a situation here, and you see this often, where you have an oscillator, in this case the RSI, leading price performance. Now, the one thing that concerns me about the health of the NYSC is that you had a close back down below the 50-period moving average. I've already mentioned the lower highs and the fact that we did not rally up to this upper band. So does that mean go out and sell your stocks? No, not necessarily. It just means that there is a warning flag on the track, and be careful. Now let's take a look at the stocks that I went over in great detail with members, and this will be just a brief overview. US dollar, very important, reaching overbought levels, extreme overbought levels. Why is that good for us? Is because we are looking at commodities. We're looking at the USO, the US oil fund, very, very oversold. We are looking for a good entry point. Last week was a bearish week. I'm expecting lower lows going into the new week. DBC, which is the DB Commodities Tracking Fund. In a consolidation, we should see a continuation move lower on a rallying US dollar, but that rallying US dollar appears poised to top out fairly soon. Okay, RIG. RIG did bounce off of this is a monthly chart, It did bounce off of its long-term support level here. Now, on a daily chart, we have seen a rally off of that historic support level. We are now looking fairly weak. I think that if we get a rallying US dollar, the pullback in RIG will provide us with a good long opportunity. Right now, I am near-term bearish, longer-term bullish on RIG. BKMU, looking good. Cup with handle formation, consolidation within a flag formation, a breakout, more consolidation. We are looking for a breakout on BKMU. Big revenue grower. Remember, yields are very critical to the banking sector, so we'll be watching the yields on the 10-year Treasury in particular before we get involved with any banks. CYBR, cybersecurity play. We're going to have a couple of these. I think there is a long-term trade to be had in this space. If the hacking of the U.S. military and the hacking and hijacking of Sony did not send a chill through everybody's spine, especially those with any power whatsoever, they're out of their mind. This sector should take off. Now, we're technicians. Just because there's an interesting story out there doesn't mean that we're going to buy automatically. We need to see a really good setup. I see a fairly good setup here. We're just looking for a trigger to fire, and we will look to get long of CYBR. Great double bottom setup on these stochastics. The chart is looking good. I am bullish near term and longer term on CYBR. Again, I go through all these charts in great detail with members on the week ahead commentary, which has already been sent out. The Canadian dollar, the FXC, we like it as an extreme oversold trade. This is our classic contrarian type trade. Very, very short term, we are bearish. However, we see a trade to the long side once the FXC fires off a buy signal to us. We use our own contrarian trading formula to decide when the time is right from a risk-reward perspective to get involved with FXC, and that time is soon. You could see that we were in a downtrend channel, and then now we have broken down below the lower band of that support level. Why? It's because they anticipated a reduction in rates by the Canadians, and last week they got that reduction in rates. So we're looking to buy on the news. But on Friday, they still weren't ready to buy on the news, so it appears that we're going to see lower lows, but we'll be ready to enjoy the short squeeze that's going to ensue on the Canadian dollar. MOLY Corp. We have traded this one many times in the past. RSI below 20. And for those who read Technical Analysis for Dummies, they tell you that you should be buying this stock. If you buy every stock just because it goes below 20, you're going to go broke. We could see a lot lower lows on this stock. We have a clear sign of institutional distribution. We'll be looking to add to MOLY Corp in the very short term once the market sends us a signal, and we don't have it yet. I think very short term, MOLY Corp is going lower. There will be a trade to be had as a contrarian counter-trend play, a short squeeze play in the very near future, but not quite yet. Institutional distribution. Can't fight the big guys. Best Buy. I think we're going to break. I think we're heading lower on Best Buy. I think this is a short, longer term. May we see a continuation pop higher on shorts getting squeezed? Absolutely. I think longer term, we roll over, we head lower on Best Buy. I am a bear. Okay, Netflix. They reported earnings last week, gapped higher, up and into resistance levels. We are bearish very short term on Netflix. This is no way a call that Netflix is going to give up all of its gains. I am predicting a short-term pullback. We'll look to scalp a short trade on Netflix. After that, for all I know, listen, folks, I'm not a fundamental guy. This stock can go to $1,000 per share, or it can go to zero for all I know. What I do know for a fact is that the stock is overbought short term. It can pop higher on Monday. We'll be looking for any strength to build short positions. TLYS, we are viewing as a short candidate. Can it pop higher? Absolutely. However, with RSI 88.02, it should be a concern. We also have resistance as noted by these topping tails at 1467. Another concern. So we view any rally in TLYS in the short term as an opportunity to short, and we will be looking to build a short position in TLYS. Longer term, it can go to $20 per share for all I know. Short term, it's going to get a snapback pullback. The TVIX, bullish key reversal. TVIX puts you twice long of the volatility index. And in all probability, if the TVIX or the VIX is rallying, you're seeing the S&P 500 in decline. So a bullish key reversal, it recaptured a support level. I like the TVIX. I am bullish longer term on volatility. I think that's the one guarantee that we will see in 2015 is volatility. TBT, which puts you short of the 20-year bond. I am short-term bearish on TBT, longer-term bullish. I think there's going to be a really great extreme oversold opportunity here to trade long. As it stands right now, I think the 20-year bond is going to experience a blow-off top. That means that the TBT will see capitulation selling, and that is where we'll find inefficiencies in the market, which we will look to exploit as contrarians. EMHY, weekly chart. It's the iShares Emerging Markets High Yield Bond Fund. Higher lows, this chart is looking fairly good. RSI, cup with handle formation. Higher lows, the chart looks strong. So I'll put it to you this way. Rather than saying I'm bullish on EMHY, I am constructive on it. I am concerned about the high yield debt market. I don't think that the worst is over just yet. There could be a short-term trade in here. I do go over this in greater detail on the focus stock analysis. Valero, weekly chart, bullish chart. I like the breakout on RSI. We have an oscillator leading price performance. Great consolidation, great bullish engulfing of the prior week's move. I am bullish on Valero longer term, especially if we get a breakout. The thing to keep in mind, folks, is that we're seeing a lot of failures on breakouts. So we have a rule that we follow when it comes to breakouts. It's called a 3-day rule, and that is something I discuss with members on a fairly frequent basis. So just beware of any breakouts. We are very cautious in our buy discipline. We only add in increments. We never jump in with both feet. That is a recipe for disaster. Last stock up is going to be FEYE. I'm very, very bullish on this chart. We have an inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline. I like the breakout. I think that FEYE is looking good from a long-term perspective. We are bullish. And once again, folks, I go over all these charts in great detail. I believe in multi-period charting, daily charts, weekly charts, intraday charts to analyze the stock, index, currency, whatever we're trading from different perspectives. We go into a trade with our eyes wide open. That's why the weekends are so important. We do our homework when the markets are closed, not intraday. That allows for impulse buying, which is a guaranteed way to lose money longer term. You may get lucky every once in a while. You need to do your research after the markets are closed. It's a simple discipline that can provide you with excellent risk-reward entry points because you go into the week with a strategy. Without that strategy, if you're in a chat room and you're relying upon information in a chat room, another recipe for disaster. So please, conduct your research after hours. And if you get any value out of these videos, please subscribe to my channel on YouTube if you're watching it there. Enter your email address on my website, and you'll have these videos sent to your inbox. We hate spam too. You will not be spammed. If you're watching this on StockTwits or Twitter, please follow me there. I'll talk to you soon. Everybody have a profitable trading week. Be well.